Good morning, everyone. Thank you for joining us for the webinar today. First and foremost, we hope you and your families, colleagues, and friends are safe and healthy. SC&H Group remains committed to providing content and events like these as we continue to navigate the challenges around the business impact of COVID-19. We hope that today's content will provide additional insights on the challenges and questions surrounding the Paycheck Protection Program. Just a few housekeeping items before we get started. All attendees will be on mute during the session. We received a lot of really good questions ahead of the webinar, and we tailored the content for today's program to address many of those, but Jim and Greg will also dedicate time to answering a handful of your questions at the end of today's webinar as time permits. In the event your question is not answered and you're an SC&H client, please reach out to your SC&H engagement team for immediate assistance. If you're not an SC&H client, we'd love to introduce ourselves, and you're welcome to reach out to Jim and/or Greg, and they'll point you in the right direction. We will be recording this webinar, and it will be available by tomorrow, May 1st. Please look out for an email from us or visit schgroup.com. Before I turn it over to our speakers, it is important to note that this information is very fluid. The content and advice we are presenting today is our interpretation of what is available at the moment. And all businesses need to continue working closely with their bank, attorney, and accountant. We encourage you to visit and bookmark our Coronavirus Resource Center for the most up-to-date content we have published. We have a number of upcoming events, and this page is continually being updated with new content as more information comes out. Our webinar will be led by Jim Wilhelm, Director of our Tax Practice here at SC&H, and Greg Horning, Director of our Personal Financial Planning Practice here at SC&H. And now I'm going to turn it over to Jim, who will kick things off for us.
Thank you, Colin. And again, welcome everyone. Thanks for making time in your day to join us. And thanks actually for the questions. They helped frame some of the content today and made sure we were going through the things that are most important to our clients and friends of the firm. And best wishes to everyone as we go through these challenging times. To get started, I think our primary assumption is most folks listening in and watching either have already applied or have already received PPP loan funding. So we're going to mostly dive right into forgiveness, various strategies around that, and some of the other concepts that we think are important for everyone to be thinking about. So the first concept, if you will, is okay, you were lucky enough to be approved for a loan, you've had funding, what should the strategy be? And while there's been a lot of talk and a lot of writing, if you will, about forgiveness, and that's something to look for, we also think people need to not drive past the opportunity to have cash available more than 8 weeks after your funding date. In order to maximize forgiveness, you have an 8-week period to effectively spend that money. It may not be the best business idea to maximize forgiveness and use all that cash during those 8 weeks. We're thinking about some industries where maybe the business is shut down or dramatically reduced in terms of volume, and having available cash 2, 3, 4 months from now, might trump any forgiveness strategy that we talk about today. As we drift into best practices, there's been a lot of discussion the last few days, probably this whole week really, around the need for the loan. There's been press around public companies that have effectively been shamed into returning their PPP money, and SBA guidance is coming out every 4 hours on documenting your certification for the need for the loan. So we thought that was important before. We believe it's even more important now. If you haven't already done that, our recommendation is you have a very detailed document as to why the proceeds of this loan were going to be helpful and help your business get through challenging times and uncertainty. what the proceeds would be used for, and how, specifically you were able to not reduce headcount, not reduce payroll, be able to make mortgage payments, interest payments, rent payments, and so forth because of these funds directly. For loans of $2 million and more, we are now seeing, I think it either happened yesterday or the day before, the SBA is saying they are going to audit the loan regarding the certification of the need to receive a loan. Our expectation is if they're going to audit the loan regarding need, they're probably going to audit your forgiveness calculation at the same time. It would seem silly not to do both. They may also be reviewing or auditing forgiveness calculations for loans of less than $2 million. So as accountants always like to say, you've got to dot your I's and cross your T's and have all your documentation in order, much like you would do when you take a position on a tax return. You want to have the documentation, you want to have your intent, and if needed, you want to have the theory behind why you think your position is correct. Beyond that, we think most of our clients have or should put the loan proceeds into a separate account. If you can get it into a money market account, great. Maybe you can earn a little bit of money over the next few months. If not, a business checking account is fine. And our concept is that as you write checks for various categories of expense, you would draw down from the loan account and effectively fund those expenditures. So if you have a payroll next week and that's $300,000, let's just say exactly, then you draw down $300,000 from your PPP account to cover that expenditure. And then when you pay rent and utilities and interest, same thing, so that when you look back, you can see all the disbursements from that account, and they will tie neatly to probably over that 8-week period, 15, 16, whatever it might be, expenditures, and they all tie to the penny, and you have a nice clean audit trail. We're picturing clients building a nice spreadsheet. Documentation for non-payroll costs, it appears it should be things such as insurance bills, rent bills, canceled checks for those types of payments, canceled checks for payments for utilities, interest. You clearly want to have saved a copy of your second quarter 941. The first quarter is going to be relevant too, because there's mathematical tests regarding forgiveness where you look at the first quarter versus the second quarter. I would have handy a payroll register and my unemployment report for the second quarter as well. One thing to keep in mind is, the CARES Act was put together by Congress. The SBA is administering the PPP loan and related procedures and processes. And as we've all seen, guidance comes out almost daily, even on things such as how much of a loan you should have asked for and should you have asked for a loan at all. So things are going to change when you go to apply for forgiveness, which will be 3-4 months from now. Couple things to keep in mind. It may not be with the same bank. Your loan could be sold between now and then, and we think that might happen rather frequently. Banks are going to have their own forgiveness forms and procedures, but I think if you build a very nice spreadsheet and go through one of the best practices we talked about above, you'll be in the best shape. From an accounting perspective, we've had a few clients already asking us, how do we book this? What we've been seeing and reading is that from a GAAP perspective, the estimate of the amount of the loan that will be forgiven should be an other income item in your profit and loss statement. Any residual amount should be on your balance sheet as a loan. And then over time, you can true those things up as you determine more or less of the loan would be forgiven. Our tip here is don't reduce various expense categories as you pay expenses with the loan proceeds, because then you won't have good comparison data when you look back a year from now or when you compare to prior years. So just have one lump sum entry as other income for what you believe will be the forgivable piece, and the rest stays on the balance sheet. So speaking of forgiveness, again, we talked about, or I talked about it in the beginning, forgiveness could be overrated. For the husbands listening, it is not overrated, but for PPP, it could be. Maximizing forgiveness is great as long as we are maximizing the use of these dollars. And we think that's an important piece of the puzzle here that folks need to remember. And almost everyone who's listening is not going to have 100% forgiveness. I won't go into the boring math details, but when the SBA came out with guidance that said 75% of your loan forgiveness needs to be payroll costs, 75% or more, and you have an 8-week period, if you just do the math, folks cannot get to 100% forgiveness unless your payroll goes up in the second quarter of 2020 versus the first quarter of 2020, and we just don't see that happening. So some of the details. The forgiveness measurement period, the covered period it's referred to, begins the day of loan funding, the day initial funds hit your account. If it all doesn't come in a lump sum, it starts on that day, and you have an 8-week period, again, to spend the money as it relates to forgiveness. There are a number of uncertainties involved in the timing of some items. Again, as an accountant, if you look at the act, the words are, it needs to be, expenses have to be incurred and paid during the 8-week period. Incurred sounds like accrual, paid sounds like cash. They have the word and, it sounds like both. That doesn't necessarily work. So we're waiting to get guidance. Is it accrual or is it cash? They do use the word paid a lot when they talk about utilities, interest, and rent. And many businesses, and if you count all small businesses, most businesses are on the cash basis. But where the SBA will land, we were hoping to know by today, but we hope to know in the next few weeks. So given that uncertainty, I think a good practice is to look at the 8 weeks and look at what rent, interest, utility, health insurance, and payroll costs will naturally fall in that 8-week period. And then think about if some of those payments will fall outside of that period just by virtue of it not being a clean 2-month period, if you will. You might want to see what you can do to bring some of those into that 8-week period. Whether or not the SBA will look at things from an incurred perspective or a paid perspective, if you did pay it and it turns out that doesn't matter, at least you've given yourself a shot for that to help in the forgiveness calculation. The forgiveness calculation won't happen until a month or two after your 8-week period. We've got to have guidance by then, and you could always adjust the calculation then once we have definitive guidance. Again, I wouldn't bring a lot into that 8-week period. It's going to hurt yourself from a cash perspective. That doesn't make sense. So we all need to be prudent there. Key dates, again, the 8-week period. If you have laid people off or reduced compensation and you're trying to maximize loan forgiveness, you want to reinstate comp as quickly as you can. You want to rehire people as quickly as you can. If people have left for other reasons or aren't going to come back, and you need to hire or you want to hire a new person to maximize forgiveness, again, do that as quickly as you can during your 8-week period. There is a June 30 date where you can reinstate comp for folks who have had their compensation decreased and rehire people who have been furloughed or laid off. It is still not yet 100% clear if you run out and rehire 10 people on June 29th, does that eliminate that aspect of the head count calculation, or does it have to be for the majority of the 8-week period? And I'll get into some of that math a little bit later on. One issue that's been bouncing around a lot is the 25% versus 75% for forgiveness. So to be clear, the SBA has said the amount of the loan that is forgiven, only 25% of loan forgiveness can be for non-payroll items. So that might not be 25% of your loan. And for most people, it won't be because your forgiveness will be less than your loan. So to be clear, the CARES Act says you need to use 75% of the loan proceeds for payroll costs. However, the loan forgiveness, 75% or more of it must be for payroll costs. So there's a little wordsmithing there, but there will be a distinction. One idea that we came up with, we've had a number of clients who've had lenders and landlords, be interested in helping their customers and tenants, respectively, get through these times, and have offered interest and rent deferrals. That's nice and will be very helpful. And usually they're adding the interest and rent on the back end. So there's a temporary cash lift. Think about that. Again, if you're looking towards forgiveness as an important strategy, you may want to think about whether you ask to have that deferral deferred for a couple of months in order to maximize the payments you're making during the 8-week period. Now, it may be that we hear from the SBA that we're on the accrual method and paying or not paying isn't relevant. But I would at least give that some thought if you have interest and rent deferrals coming your way. Compensation during the 8-week period, it isn't just pay rate or hourly wages times the hours. It would include commissions for people who get those normally. It would include bonuses. So you might want to think about that. We know we have some clients who have, we'll call them frontline employees, and they're giving them some bonuses for sticking it out and going into work when maybe it wasn't as safe as it was 2 months ago. So things of that nature, or perhaps there's a sales bonus or some other type of bonus that you might have deferred past your 8-week period, but if you want to maximize forgiveness, that might make sense. One other comment on forgiveness, at the end of the day, you're going to need to certify the amount of forgiveness you're requesting, just like you certify the need for the loan. So you want to be careful and talk with your attorney and your accountant and your banker to make sure that is right and tight and appropriate. One more thing on forgiveness, then I'm going to turn it over to Greg, talking about headcount issues. Fair amount of probably a little too much complexity here, but we'll try to sort it out for you a little bit. Once you compute your potential forgiveness, you can get what we're going to call a haircut on that number. Two ways you can get a haircut. One is if you have reduced headcount during your 8-week period compared to 1 or 2 periods at your election. You can compare it to the period of February 15th, 2019 to June 30, 2019. And the comparison would be average FTEs. Or if it would produce a better result, you can compare your 8-week period from an average FTE headcount perspective to January 1st, 2020 to February 15th, 2020. So that is up to you to choose. If your headcount is down, which will be many people, many businesses, you can avoid a haircut here if you rehire new or existing employees by June 30th. Similar haircut is if compensation levels for your employees have dipped when you compare the 8-week period to the first quarter of 2020, and if that decrease is greater than 25% on an employee by employee basis, then you will have some of your forgiveness reduced. And I think that's all I had on that. Greg, if you wanted to talk about some of the issues facing self-employed taxpayers.
Sure. Thanks, Jim. 6 or 7 weeks ago when we started this remote work environment, Jim started growing out that beard and it was black. And then April 3rd came, PPP program opened up for business, and you see what happened. Most of the details that Jim just covered apply to all types of business. However, I do today also want to cover some unique characteristics that will impact particularly on self-employed individuals and independent contractors. So for this purpose, we're speaking about individuals who filed a Schedule C with their annual personal tax returns. So first, I want to emphasize Jim's commentary around the need to document the business environment and the factors particular to your business that justify the need for the loan. So you need to remember that the certifications that you signed in connection with obtaining the PPP loan include a statement that current economic uncertainty makes the loan request necessary to support the ongoing operations of the business. So we believe that each borrower should put together a memo, so talking about the financial statistics, talking about the environment, the business environment, the industry, in support of the loan, as well as financial projections, and really have that buttoned up so that you can put your best foot forward if and when the SBA or authorities or your bank request support for the forgiveness request. So while we're talking about, and I would also comment that the best time to put that memo and that information together is now. Remember that, it's easy to, if for example, we continue down a path of improved outlook, memories are short, and documenting the uncertainty that existed at the time of the loan application is going to be critical. So while we're talking about documentation, for self-employed individuals, in some respects, the documentation that we expect will be required for forgiveness is likely to be a lot more straightforward than for corporate borrowers, at least with respect to those self-employed individuals who have no employees. For those folks with no employees, forgiveness calculation is going to be based on your 2019 earnings from Schedule C. This is the same earnings number that was used for the award of the loan, although it uses a slightly different measurement. So the loan was likely approved for 2.5/12 of your 2019 Schedule C, line 31. The forgiveness side only covers an 8-week period. So when we go to look at the forgiveness calculation, you'll find that we start with that same line 31 of the form Schedule C from 2019, multiply that by eight weeks out of 52 or 8/52, and that is the algebra that works for purposes of determining available forgiveness for the earnings, the self-employed earnings piece of the loan. So, for example, we have to apply a $100,000 compensation limit to that calculation. So, for an individual, a self-employed individual who had no employees with $100,000 or more in Schedule C income in 2019, we would expect the loan to generally be a total of $20,833. That's 2/12 of $100,000, and then the forgiveness is going to be 8/52 of $100,000. So the maximum loan forgiveness based solely on owner earnings will be $15,385. Now, in addition, and to be clear, that we received a number of questions about this. Retirement contributions and health costs associated with self-employed individuals are not in the calculation for forgiveness. Only retirement contributions and health costs paid for employees would be added to that $15,385 potential forgiveness. Now, the other qualified costs, the 25% allowable that Jim referenced for rent, utilities, business interest that are incurred or paid, we'll find that out, over the 8-week period. The most, if you do the algebra on that, if you received a $20,833 loan and the maximum forgiveness based on owner earnings is 15,385. Well, that the algebra becomes a maximum loan forgiveness of 20,512, assuming that you have enough rent, utilities, business interests, et cetera, to cover that difference. That would leave you with still a $300 or so unforgiven loan balance. So we've received a few questions as well from self-employed folks about, hey, do I need to take draws to support the forgiveness during the 8-week period? And the answer is no. The calculation is a straightforward calculation based on 2019 Schedule C. So your bank is going to require a copy of your Schedule C for 2019. Each bank is likely to be a little different. They may require copies of 1099s or other records in support of that income that you reported. You should be prepared to provide copies of invoices, receipts, some form of payment verification in the form of canceled checks or bank statements for that 8-week period to support the rents, business interest, and utilities. And building that file throughout the 8-week period is going to be easier than trying to assemble it on the back end. For self-employed folks who do have employees, you also need to provide payroll records, like Jim talked about, as well as support for health insurance premiums and retirement contributions paid, again, only for those employees, not for the self-employed individual. Finally, with one other item with respect particularly to self-employed individuals, many of those folks will have home office expenses, and the forgiveness calculation can include a portion of your home mortgage interest or rent, as well as utility costs for your home. But that's going to be allocated based on the square footage of the home office relative to the square footage of the entire home, similar to the home office deduction calculation. However, in order to qualify for these types of expenses, the home office expenses as part of the forgiveness calculation, you generally need to have been eligible to claim that home office as a deduction on your 2019 return as well. 2020 is not. If 2020 is the first year of your home office usage, that's not likely to pass muster for forgiveness. Finally, one more important note for self-employed individuals. One of the relief provisions of the CARES Act expands the coverage of unemployment benefits to include self-employed individuals. However, to the extent that you are receiving unemployment benefits, you're generally not eligible for a PPP loan. So if we have anybody on the call who is in this situation where they may have applied under the CARES Act for unemployment benefits and received or thought about applying for a PPP loan, you need to be ultra careful there. If you've received a loan, you may want to look into whether you have a requirement to pay that back. With that, I think I'm going to stop there. I think Jim's going to talk a little bit about some of the significant open questions that we have, and then we'll jump into answering directly questions that came from all of the participants in advance.
Thanks, Greg. So open items, we put together 6 or 7 that we think are kind of critical areas where we're going to need guidance, primarily from Treasury, SBA, and maybe one IRS issue. So let me dive into those. So the first one we've talked about a little bit already: costs incurred and paid. What does that mean? Is it accrual? Is it cash? Is it somehow both? This is going to be important. You know, it's an 8-week period that starts on a random day. It's not the first of the month. The AICPA has done a nice job putting out some recommendations to the officials involved in all of this. They had a nice idea, which was, can we have the 8-week period start on the next payroll you have after your loan has been funded? That would seem clean, right? or the first of a month, but we don't have that at this time. So cash versus accrual is something to keep an eye on. And as I said before, if you can, within reason, adjust the timing of some payments to bring them into your 8 weeks, and it turns out for forgiveness calculations that doesn't help you, you really haven't hurt yourself if you're only moving something a week or two or something along those lines. The June 30 end to the covered period, if you look at the act, which hopefully no one has done except for geeky tax people, it says that your 8-week covered period must end by June 30th. Well, what if we have clients that will get approved, hopefully, this week for PPP funding, and maybe that doesn't happen until a week or two from then? And if your 8-week period ends after June, what happens? There's been some recommendations made that the June 30 cutoff maybe doesn't really make sense at all. If you have a business that is shuttered, your retail business that you literally cannot be open, or if you're a restaurant and all you can do is carry out, it's just tough for some industries specifically to look at that 8-week period starting right away and having it have to end at June. So will the SBA move that date out for everyone or for certain people? We'll keep an eye on that. So a tax issue, a tax guy has to talk about tax issues. In the CARES Act, it's very clear. The plain language in the statute says that the loan forgiveness that one would get from your PPP loan is not taxable. So that sounds like great news, but tax people always have to keep reading and thinking. And so there is a code section 265 that says if you have expenses related to tax exempt income, those expenses are non-deductible. This happens very frequently when clients might have municipal investments. So they have non-taxable income. Expenses related to that are not deductible. Well, if you apply code section 265 to your PPP forgiveness, that would indicate that all that payroll, the rent, utilities, etc., would not be deductible. Is that the right answer? How will the IRS rule? We obviously do not know. When I think about it on a net basis, if the government is quote unquote giving you money and you use that money to create a tax deduction, you really do end up with a tax windfall if the forgiveness is not taxable, but the deductions are deductible. And so again, I could speculate for 5 more minutes, but I won't. We need to hear from the IRS on this probably as opposed to the SBA. And then one other wrinkle here would be, let's say the IRS says, we believe Congress wanted to allow this tax windfall that Wilhelm's talking about to occur. That's great. Federally, we would be fine. Now we have to think about the states who are also getting hammered right now with the economic issues. And would they say, we want to decouple from that aspect of the CARES Act as it relates to income taxes, and we would want to tax that money? Again, stay tuned. Interest expense, we've seen a lot of questions. What is covered, what is not? In the CARES Act under section 1102, it's a slightly broader commentary around what would be covered. In the forgiveness section, it's a little more narrow. So is it just mortgage interest or is it interest on other business loans? What is clear is your loan needs to be in place as of February 15th, so it cannot be a new loan. The self-employment guidance that came out to me seemed to indicate that interest could be not just on a mortgage, but it could be on loans secured by personal property of the business. So I liked seeing that. If that carries over to businesses that have employees, that would be helpful. One question we had from a client, I have a line of credit, was already in place. Obviously, given the times, I've increased the balance on my line of credit since February 15th of 2020. Is that increase in loan balance the interest related to that increase going to qualify for forgiveness? If I had a guess, which I don't, but I will for the moment, I would say no, because that seems to me that that is new debt, not old debt. But maybe we'll hear on that. Related party payments. So we can have all kinds of related parties payments. We can have compensation to related parties, rent, interest. The CARES Act is silent on whether related party payments qualify or do not qualify. I think at this point, it's relatively safe to say related party payments should be allowed for forgiveness. They were not disallowed, if that's a phrase, when you applied for your loan. It doesn't mean the SBA couldn't change the rules. They did implement the 75-25 rule. You know, that's really not in the statute. So they kind of get to make the rules there. But I think it's safe to say related party payments should be allowed. Again, as long as they are reasonable, as long as the lease and the loan and the employment existed at February 15th, you should be fine. Rent, warehouse and office rent seems to be in. Personal property rent, we aren't sure. Although again, the self-employment guidance gave us a little hint that maybe it will be allowed. That would, I think, make sense. Beyond that, define rent. Is it just the rent you pay on the first of the month, or would that include things like common area maintenance, taxes that your landlord passes through, etc.? We don't know yet. Again, the key is any payments that would qualify need to be pursuant to a lease dated prior to February 15th. Utilities, in the Act, they do give us a little bit of a definition there. They talk about utilities covering gas, electricity, water, telephone, and internet. I think those are relatively straightforward. Transportation is thrown in there. There could be hopefully some guidance coming out for these issues. Questions around transportation might be, does reimbursing employees for mileage count? Does an auto allowance count? Does reimbursing employees for their mobile phone count, or their internet they use at home count? Again, I think those are probably reasonable interpretations. If these were things you were doing before February 15th, then I would clearly put them into your calculation and your spreadsheet now. I would fund them with PPP dollars, but before you submit those for forgiveness, we hope to have guidance that would help you make sure that those things are handled correctly. I think we're going to go to the questions that we've received over the last couple of days, and I'm going to let Greg kick it off and respond to a few of those.
Thanks, Jim. If you noticed on that previous slide, the numbers that appeared were the number of Google searches that we noticed as of yesterday on those topics. So there's been a substantial amount of interest in those questions. We were hoping that we would have answers to more of those questions when we originally scheduled this webinar, but it looks the way the Treasury has been operating is some of these answers going to be dribbling out over the next 8 to 10 weeks. So with respect to expenses, one thing I'd suggest is we just, the best practice would be, if you think it might qualify as a utility item or a rent item, we suggest you start tracking it now, operate under the assumption that it will qualify, be ready to include it in your calculation, and then pay attention to guidance from us, from your bank, or from the Treasury. So to the questions, I think we're going to try to use the last 20 minutes here to get through as many of these as we can. I think the number of questions is, 70 or 80, so we'll do our best. We'll try to take them as quickly as we can. So first one I'll deal with, one of our employees recently left the organization voluntarily. Will this reduce the amount of the loan that is forgiven because we now have fewer employees, or is there an exception because of voluntary termination? And the answer there is no. There's no exception based on voluntary versus involuntary. It's a straight formula, and to the extent this position is not replaced by June 30, the amount of your loan forgiveness likely will be reduced. Next, so if we terminated a quarter of our staff on April 1st, do we need to rehire them for the loan to be forgiven? We have not received the loan yet. So here, forgiveness of the loan is not an all or none event. The loan amount forgiven will be reduced by headcount reductions and significant reductions in the employee pay rates that are in effect during the 8-week testing period. So unless restoration occurs by June 30. So each situation is unique. Calculations are complex. It's going to be the rare borrower that gets full forgiveness, but we're going to recommend there that you work with your advisors and stay in touch with your bank, and that guidance is likely going to apply to many of these questions. I'll take one more, and then Jim, you can jump in. So how do you calculate an FTE for this purpose? Are coaches, substitutes, and other seasonal employees included in this FTE count? Okay, so for purposes of the eligibility of for a loan, every employee is counted, period. Whether they're full-time or part-time, they count as an employee. However, when you get to the calculation of loan forgiveness, the loan forgiveness calculations during the testing period and the comparative periods where you have the choice between the two, they require calculations that are based on full-time equivalents. So for that purpose, an employee, so if you have an employee, a W-2 who receives a W-2, if they work 10 hours a week, that would be included in the forgiveness calculation as a 0.25 FTE. Jim, you want to take a couple?
Sure. So self-insured for healthcare, how does that affect premiums? The Act stipulates that costs incurred by an employer during the 8-week testing period for employee health benefits should be includable as a qualified payroll expense and therefore includable in your forgiveness calculation. Whether that be if you're self-insured versus using insurance to handle that. Insurance premiums, when you pay them, that's pretty straightforward. Self-insured, again, is going to come down to incurred versus paid. We would caution you that prepaying expenses in this area may work, but it may not work. You're going to want to chat with your appropriate advisor there. Can we grant a temporary 10% pay increase for employees that are working during the forgiveness period? Do commissions paid count as well? Speaking on behalf of the employees of this business, the answer to that is yes. You can increase pay at any time, but that would count, right? And so if for some other reason your payroll spend was down, but people received a pay increase, that's going to bring the math back up and may help you maximize forgiveness. Commissions paid count salary, wages, bonuses. One thing to keep in mind, there is a cap as it relates to the compensation of any employee during the 8-week testing period. And that's effectively at an annualized run rate of $100,000. So during the 8-week period, there's a $15,385 per employee cap. So if you pay someone a $50,000 bonus, it's not going to necessarily help you with forgiveness beyond the $15,385 of their total comp. And then one other quick thing to add there, because I've seen this question a few times. When we look at the $100,000 cap for employees, that is on, we'll call it, to simplify it a little bit, W-2 wages. Benefits paid for that person for retirement or health insurance can be on top of that $100,000 annualized comp cap. I'll do one more, then flip it to Greg. Do we have to set up a separate bank account? I don't think it's required. We just think that it's a best practice and leaves you a nice audit trail.
Okay, so we have a question. Is there a need to track projects that people are working on? Can salaries that are paid by federal grants and contracts be counted when calculating payroll costs that count toward forgiveness? Well, here we're talking likely, it sounds like we're talking about a government contractor. Those types of businesses may be able to secure funding under Section 3610 provisions, and therefore this gets pretty murky pretty fast. And we're going to recommend there that you need to consult with your contracting officer about that funding versus the PPP funding, and you should do so relatively quickly, because you're not eligible to receive both 3610 benefit as well as PPP benefit for the same items. The another one, I've heard that there will be a lengthy and complicated application process in order to apply for loan forgiveness, and that forgiveness is not guaranteed. Can you talk about that? So here, the Act requires that banks issue a decision on forgiveness within 60 days of the application from the borrower. It's clear that there will be a review process, and that the review process will be more rigorous for larger loans. So just yesterday, last night, actually very late last night, I think, the Treasury issued a guidance that issued a statement that backs up Secretary Mnuchin's comments that he made earlier yesterday, that all loans of more than $2 million will be subject to an SBA review process. That guidance also indicated that smaller loans are not exempt from review, but they will look at 100% of all loans in excess of $2 million. One more. How might the rules for forgiveness change going forward? Well, given that the rules for applying for the loan have changed multiple times, even as late as yesterday, we suspect that the forgiveness rules are going to evolve over the next 6, 8, 10 weeks or more. The best advice we can give you there is stay tuned, keep an eye on our website. I will say that it's not unlikely, to the extent that we accumulate enough meat for another webinar, it's not unlikely that we would do another webinar like this with more answers later in the process, and certainly everybody on this list would receive an email invite to that webinar. Jim?
Sure. Exactly what type of expenses qualify under utilities? Car and gas allowances, cell phones, auto leases, parking spots rented in a landlord's garage, mileage reimbursement. I think I touched on that a little bit. I think most of those seem like they would qualify, again, presuming this is subject to agreements in place as of February 15th, 2020. Again, as we've already said, I would put them in your math, get them into your spreadsheet, have your documentation ready for that. And if it turns out, the SBA guidance narrows the funnel there, if you will, related to those expenses, you can always pull it back out. But it might make sense to make sure you've reimbursed employees for mileage and car expenses, phone, and all that good stuff prior to the end of your 8-week period. See another question on the 8-week period. There is currently no exception for the 8-week period starting other than the date of the first disbursement of your PPP loan, and it ends 56 days later. There's a question about what can count in health insurance premiums, and I think it's health benefits is the wording that's in the Act. So it's health expenses, which would include health insurance premiums. We haven't seen any interpretation or guidance whether that could include anything for disability premiums or for life insurance. Greg, I'm going to let you do the next couple.
Okay. There was a question, can we include storage unit rent? That under the self-employed guidance, which presumably would apply broadly, that's pretty clear that to the extent that the storage unit is used for business purposes, rental costs should qualify for inclusion in that forgiveness calculation. Another, can we include retirement costs and health insurance for employees who are already capped at the $100,000 salary? So yes, employer retirement plan contributions and employer paid health insurance premiums are added to the gross payroll costs after applying the $100,000 limit. So one more. So FAQ says borrower certification must take into account their current business activity and their ability to access other sources of liquidity sufficient to support the ongoing operations in a manner that is not significantly detrimental to the business. Does this mean the borrower must draw down lines of credit or look at other loans prior to applying for PPP? Also, does this FAQ contradict CARES Act that eliminated the ordinary requirement that a borrower not be able to obtain financing from other sources? Well, that's the heart of the 12-odd million searches that we saw on the open items list. This is probably the hottest issue out there. The Act is now sort of divergent from Treasury guidance and is evolving in the media every day. Our opinion is that you need to be comfortable with your certification, that and that certification requires that the business was harmed at the time, or that the uncertainty at the time of the loan application would show that the business would soon be harmed. You need to pay attention to this. We know there's a May 7 date out there that would allow you to repay if you become uncomfortable with that guidance. If there's question, and for many of you there will be questions, I would suggest that you work with your advisors to document and analyze your industry, your company, the situation you're in, and remember my comments earlier. You need to be able to show that there is a likelihood of significant damage, I think, to the business. And so at the time of application, in many cases, there was so much uncertainty that should play in the favor of many businesses. But this addition of a new May 7 opportunity to change your mind makes that a bit more murky. And so time to reevaluate, time to document, time to put your best foot forward. I would also say there was another question, maybe I'll pick this off, but I don't have the exact wording on it. There was another question about what are the penalties for failed certification, and the answer there is that I don't have the exact, but these are criminal penalties potentially. I would imagine that you can expect. I would think, my opinion would be, you can expect that SBA is going to apply a measured approach and treat a public company with access to broad sources of funds differently than a private business with far fewer alternatives, and also measure the level of attention and care they put into determining and documenting their need. And so I don't imagine that we're going to see an all or none kind of approach towards enforcement here. But we're not the attorneys. You need to talk with your advisor about that. Jim?
Yeah, I think, the spirit, if we go back to the Act, the spirit was, if a business, if not for the PPP funding, would you have had trouble paying your rent, paying your loan payments, paying for your utilities, or maintaining your headcount and maintaining your payroll at those levels? If you can look in the mirror and say, yes, without this money, I would have had trouble making these payments. I would have cut I would have reduced headcount. I would have reduced payroll. That's really where the crux of this should come into play. I think a lot of the noise out there in the media is around 4 or 5 dozen public companies that probably should not have applied, but clearly you need to be comfortable that with your certification, and you have 7 days to bail if you're not. We had a question about taxes. I think we already answered that. Severance pay does qualify as a payroll cost. So again, I may be oversimplifying a little bit, but if you are trying to think about what counts as payroll costs from a wage perspective, it's what would show up in someone's W-2, in addition to the retirement plan benefits and the health insurance benefits that are also part of that definition. Here's a good question. Again, it gets back to the definitional aspects of costs incurred and paid. So a question was, can we use our 2019 profit sharing plan contribution as part of the 75% payroll eligibility for forgiveness? We typically contribute in 2020. This is a super common situation. And here's one where I just said, hey, if you can wiggle things a little bit and bring a spend into the 8-week period that you were going to spend 2 or 4 weeks later anyway, and it helps with forgiveness, why not do it? This is a perfect example of that. Again, I would love to have a definitive answer, but unfortunately we don't. If that was incurred in 2019, but you pay it in 2020, does that count? I don't know. Could you prepay some of what you will pay for 2020 and get that done in the 8-week period for that to count potentially? Or is it on an incurred, accrual basis, if you will? Hopefully, as Greg said, we can get a big chunk of guidance from the SBA, which would be, helpful to us to redo, to have a version 2 of this, if you will, PPP 2.0, and we can circle back on some of the, 7 or 8 big questions that will allow people to have a little more certainty around the forgiveness calculation.
I'm going to take this last one. So PPP loan forgiveness for sole proprietor, home-based office, family business, payments of estimated state taxes and contributions to self-employed 401k during the 8-week period. So clearly this is a sole proprietor looking to increase their forgiveness using 401k and estimated state taxes. The reality is they don't come into play in the forgiveness calculation unless there are other rents, home office expenses. Your forgiveness is going to be 8/52 of line 31 of 2019 Form Schedule C. With that, I think we're about reaching our end. I'll turn it over to Colin for final comments.
Great. Thanks a lot, Jim and Greg. And thanks to everyone in attendance for today's webinar for joining us. There were a number of questions that came in during the webinar. Let us sort through those, and we will follow up with, if you are a client, please do reach out to your engagement team first and foremost, and we'll make sure we're communicating with them so that they're prepared. If you're not an SC&H client, we'll do our best to get back and get you guys communication and responses as we have information. We do encourage this group to keep an eye on our resource center. That's still going to be the best place for new content as well as updates to existing content as new information is made available. But on behalf of all of us here at SC&H Group, we do want to wish you, your families, your businesses, and your colleagues the best as we all look ahead. If we may be of any assistance, please don't hesitate to reach out to us. Stay safe, stay healthy, and thanks for being with us today. Everyone have a great Thursday and enjoy your upcoming weekend. Bye.